I made a little over $1,500 this morning trading the S&P 500. In this video, I'm not only going to give you my daily buys, but also executions on why I took this trade, as well as my overall thought process from start to finish. Before we get into the video, make sure you guys are following me on Instagram if you guys haven't already. This is where you can find me. Coming into the market here on the daily time frame, some key things I want to take note of is this buy side liquidity, which we did take out on FOMC on Wednesday, so our weekly objective has been met. Next thing I want to take note of is this TGIF concept. TGIF stands for thank God it's Friday. Essentially, it means that if we have an overall bullish week or an overall bearish week, that Friday tends to be the reversal. Meaning Monday we had bullish price action, Tuesday we had bullish price action, Wednesday we had bullish price action, and Thursday we had bullish price action. So that Friday I'm anticipating being that bearish price action back into the weekly range. So not only did we meet our objective for the week, but we are also in a TGIF model. The next thing I look at is intermarket analysis. So as you can see, ES did not take out these highs, as you can see, but the NASDAQ did take out these highs, as well as the Dow Jones did take out this high as well. So when we have a divergence like this, where one pair out of the 3 correlating pairs, or maybe 2 correlating pairs, do not take out a high, that is overall divergence and bearish in the index. So seeing that divergence, that only added then confluence to my bearish narrative. As well as coming into a market, the dollar was also in a TGIF. As you can see, on Monday we did have that rejection from the high on the dollar. Tuesday was bearish. Wednesday we had a harsh decline. Thursday we continued that harsh decline. So now coming into Friday, we were bullish on the dollar. The dollar is correlated to the S&P, so seeing the dollar go higher today gave me the overall green light to be bearish on the ES this morning. Coming down here into H4, I want to take a Fibonacci and anchor the low to the high of the Fibonacci, and I want to take a note of this 50% level right here. So whenever you are trading, make sure you are taking note of the 50% level, as price does not always have to take out a high or a low. As you can see, that's exactly what happened. Price came up into this 50% level, found rejection, and as the market then opened, we did see that decline, which then further gave me the confidence to look for shorts in the market. Something I want to take note of every time when I'm on the H1 is structure. As you can see, we created this high, then we created this higher low, then we created this higher high, taking out this prior high, then we created this lower low, taking out this prior low, creating a break of structure lower, and then we create this lower high, which also gave that rejection from the 50% level, as well as that SMT divergence. And then after giving that rejection, we then see this lower low. So overall, coming into the marketplace, my overall thought process is price is bearish. We broke structure before, we came higher but failed to get above this high. So now I'm anticipating a pullback into this level here to then see a continuation lower. So what are some things we can take note of when looking at this area? First thing that catches my eye is this fair value gap that was then broken. When we have a fair value gap, a bullish fair value gap that is now broken, that is now turned into an inversion fair value gap. Essentially, it's a fair value gap, support broken, turn resistance. So as you can see, price should usually come down into this fair value gap and find support to go higher. But since we are overall bearish and order flow is leaning towards the downside, after creating that SMT divergence, after hitting that resistance, order flow is now shifted from bullish to bearish. So this fair value gap is now a support broken, turn resistance, anticipating a pullback at least to this level of this fair value gap to then see the market go lower and continue making lower prices into our objectives. A lot of my objectives and my overall draw on liquidity comes from the 15-minute time frame. So some things that we can take note of here is this sell side liquidity pool. As you can see on the decline lower here at that 8:30 news embargo, price came lower but failed to take out this sell side liquidity pool. Essentially, this is engineered liquidity where price came lower but failed to take out this low. So retail now thinks this low level is now some support level, and most likely retail would be looking for longs, anticipating higher prices. Essentially, this being a double bottom, but it's all engineered, meaning price failed to take out this low on purpose to then entice traders to think this is now support, to then give a pullback into this level, to then go lower. So that's going to be my first objective in price action, and my second objective here is going to be this M15 order block here. You always want to take note of order blocks, last down close candles, last up close candles, before you ever want to get into the long wicks and then eventually the sell side liquidity, because sometimes what can happen is price come down into an order block and overall either consolidate or start to push higher. So you want to make sure you guys are taking profits along the way as you guys are in the trade, and never want to let a good trade turn bad on you. We have our areas of draw and liquidity marked down. Now we want to take a look at the inefficiencies. So the first thing that caught my eye is this M15 bearish fair value gap, which we could put a middle line here for the 50% level. So overall, coming into a marketplace, my thought process from the daily down to M15, my overall bias is bearish. Price right now is speaking to me saying that it's bearish, and I'm anticipating a retracement back into this level. I know it cannot take this high, so I'm anticipating a retracement back into this level to then see an overall rejection lower, back down into this low. Coming down here into M5, before 9 o'clock open, I put a limit order right here at this M15 bearish fair value gap 50% level. That 50% level, consequent encroachment. My stop loss just up here. The reason why I had my stop loss up here is because this was before market opened and this was before news, so I wanted to take into account that added volatility that was going to come into the marketplace. And my take profit was down here for a 2-to-1 R, just below this sell side liquidity and just above this bullish order block. 9 o'clock opens, then we see that push higher. We eventually get into our trade here at 9:12. We get into our trade. Price then taps into that H1 inversion level, as well as there is a M5 bearish fair value gap right here that also taps into. Then we see that rejection, that bearish engulf, which is exactly what we want to see after price tapping into a bearish fair value gap. And then we see that break lower, that continuation lower, and then we eventually get down into our targets, tapping into that M15 bullish order block. And this is why it's important to make sure that you guys are setting limit orders and you guys are taking profits off the table. Let's say I wanted 20 points here and I was not taking profits and I got greedy. Price would have overall reversed on me here and came back at break even. So always make sure you guys are taking profits off the table, whether that be at the sell side liquidity or at the order block. Make sure you guys are taking something off the table and never try to hold for too much than you can chew, or things like this could happen. So I set a limit order here. It was valid. It was just below the sell side liquidity and just above that order block. Price tagged me, and overall it was a good trade. Make sure you guys like, subscribe, as well as comment what you guys want to see next. That tells me that you guys like these breakdown type videos, and I'll continue making them every single week. I'm Arkham. See you guys later.